So if we continue, how do you use them to trade? How can you use our GEX 1 to 10 to trade? So first, they represent reaction zones. So our gamma levels act really as a sticky price level where the price or the underlying price, when reach those levels, can significantly accelerate. And this happens because option dealers or market makers have to hedge their position. So these are the levels with the highest concentration of gamma, and therefore there is a lot of hedging activity as the price approaches this level, and therefore they become market reaction zones. And we can see an example, and we're going to go in the chart. This is an example from this morning on the ES future. The market was really bullish in the beginning of the session, went all the way up to GEX 1, almost at the one-day max. And as you can see, the price actually reacted perfectly on the level and kind of moved to the downside. The second way you can think about those is really they can be catalysts of volatility. So when the market approach gamma levels or high gamma levels, so important gamma levels, the traders or the market makers that are dynamically hedging their portfolios can create a cycle of buying and selling activity that can increase the effect on price. So you can see like an increased volatility as we approach those levels. And this is another example from today. I think this is on, we approach the GEX 1 with a strong momentum. We break above that and we see like a very, very fast activity to the upside. And then the price kind of like goes back towards that level as well. The third way of using gamma levels are as risk management tools, both for institutional and retail traders, and they can help you provide a risk framework, helping you anticipate where movement can occur, where you should be paying attention to, and obviously how can you plan your trade accordingly. And for example, if we look at this example, let's imagine that you were thinking on kind of like a long position, and you have your target, you have your GEX 3 as a target, and you have your GEX 1 as your risk management. So you could potentially plan your trade and your risk reward based on those two levels as well. Then we use gamma levels as a sentiment shift. And those zones can be really reactions where there is price sensitivity that might be also linked to the change in sentiment. So basically monitoring those areas, seeing if any trends changes, obviously comparing, for example, Patrick really uses confirmation, and we're going to talk about that in a second, using other factors like the VIX or other factor. They can serve as a sentiment shift indicator and show you what are the areas where the price could retrace. And if we go back here, this was a chart on the crude oil future from this morning. We were kind of like in a downtrend phase. As you can see in the arrow, the price touches the GEX 1, break, stops there, and you see a stronger reaction to the upside. So as you can see, from a kind of like a downtrend area, we then move to kind of like a strong uptrend. And then finally, those are the levels monitored by the institutions, because we have a lot of gamma, a lot of open interest at those levels. So obviously those are highly monitored levels from institutions. And obviously we know the institutions tend to move the market because when they come in with large volume. So knowing the levels monitored by the institutions can also help you plan your trade and develop your trading plan.